This is your Wall Street wake-up call. Oil prices reaching a 4-month high as U.S. inventories decline. Here with me now is Jeffrey Carbone of Cornerstone Financial Group. So Jeffrey, we're seeing U.S. crude inventories come down, and that's sort of providing some much-needed movement for oil near $50 a barrel. This is something we haven't seen in 4 months. What's your take on the movements we've been seeing?
Well, you know, it's kind of interesting because you take the whole year as a whole. You take the year as a whole. The markets and oil bottomed in February 9th earlier this year, and now we've had a 26, 28. We've had a big rise back up into the 50s, but we've been stuck in that 42 to 48, and we're starting to see that breakout. Some with the supply issue that supplies dropped. You also have the last week with OPEC coming to possible production cuts throughout the OPEC nations. Doesn't take into account, Iran. Will they actually go with it? But you're also seeing Nigeria having some issues with possible production levels. Venezuela, it's harder now to turn on when oil's as low as it has been, turn them back on and get it producing at the higher level again. So you're seeing this volatility within the oil markets, which is correlating back into the equity markets. Oil's up, markets have been up.
Well, and that's a theme we've been seeing for quite some time. Is there a price in oil that will cause the big hedge funds to stop selling stocks anytime we see oil drop? Is it $50 a barrel, $55 a barrel, maybe something even higher?
Well, and I guess that's the million-dollar question, right? We're trying to find that direction. I think somewhere between, it may be somewhere in that 55, 60 range that we actually see that level the production level kind of gearing up at that level. Hedge funds may take a different position and different side of the oil trade.
Sure.
But your guess is as good as mine. But I think we're in this range right now that, just like with oil, the markets and the hedge funds, everybody's trying to figure out what direction. And we've got, just like the markets, we've got oil in search of what direction. But we're starting to see a little bit of a breakout with oil supply levels as well as possible production cuts.
And we're not that far away from $55 a barrel, but keep in mind for 4 months we've been between $45 and $50, so it's been a narrow range for quite some time.
Exactly.
The other thing I want to ask you is the market sort of anywhere near supply and demand balance? I mean, what's your take on demand?
On the markets or oil?
Oil.
Well, I think you still have, when you look around the world, you still have the two biggest users of oil, the U.S. and China. There's really no production drops, even though China may be slowing down. They're not dropping their production levels or usage levels, nor is the U.S. So I think we're starting to see that supply, yes, as high as it has been. We're starting to burn some of that supply off. We'll continue to burn some off, and as well tie into the production cuts that we could see around OPEC and other nations. We may see that the oil start to level off in that 55, 60 barrels.
Now, are you telling clients to make any changes to their portfolio based on what we're seeing with oil?
We've still continue to stay away from the exploration and producers. We really like more midstream pipelines, refiners. It doesn't matter what really the price of oil. We still need to refine what we have. We still need to move it through the pipeline. So for our clients, we've kind of stayed more in the midstream pipeline level with master limited partnerships, MLPs, whether it be mutual funds, ETFs, and then we've also used some of the refiners that are out there. So those are probably from the energy sector. We like the refiners and the pipelines.
Any specific names that you're looking at in particular?
My compliance department would go crazy if I gave you. I wish I could, but I try and give you if you find any good refiners, and there's quite a lot of great ETFs and master limited and MLPs or mutual funds that have midstream pipelines involved with them.
Jeff Carbone, we'll leave it there. Thank you so much for coming by.
Thanks, Scott.
I'm Scott Gamm, and you're watching The Street.